What's good, guys? Welcome to another video. It's your boy AJ from AP Trades, and this is just gonna be a quick trade recap. Just going over the trades that I took today. It's Friday, January the 3rd. So hope your 2025 is going the way you would set it out to be, expected to be. If not, it's early in the year. You still got a lot of time left, baby. But anyways, I'll make this video super quick. Just want to go over the IWM trade that I took today. Um, I mean, all my videos, they should, for the most part, pretty much look the same, right? You shouldn't hear me talking about multiple different strategies that I use, different setups that I get in on. Every setup that I get in on is either a fair value gap or a inversion of a fair value gap. And I don't have my mic for this video, so I hope that the sound quality is pretty good. I'm not even gonna back check it or anything. I'm just gonna go ahead and make this video. I've got a lot to do today. Um, so yeah, let's just get into this trade real quick. Quick trade recap on the IWM trade. So what exactly was I looking for here on IWM? Okay, so we had an opening gap from yesterday's candle close, and then we had this big gap up to today's candle open, right? So initially, when I see this kind of happen, I automatically draw a line like right here where the first candle, the bottom of the first candle, right? Because usually this is going to be like the opening low. So if we break this low, I know I can look for a retest to this area and a rejection. If we get a rejection, I can get in, right? So while price is moving up, it was creating fair value gaps, right? It created a couple different fair value gaps, a 2-minute gap here. There was also a 1-minute gap up here somewhere. I was looking for my entry up here, but I couldn't get it. This candle happened way too fast. Way too fast. So I couldn't get in on this. I was not going to chase the market. It's just not what I do. I do not chase the markets at all. Right. So I was looking for my second opportunity um, right here at this fair value gap. Okay. No, that wasn't the one. That was not the one. And we're on the 1-minute time frame. My bad, folks. My bad, folks. So this was the fair value gap I was looking for or playing off of. This one right here. Right? So we see we have a 2-minute fair value gap. 1, 2, 3. The gap is in between the first candle wick and the third candle's wick. Okay? In a bullish move, right? Bullish move, first and the third candle. In between those wicks is where the fair value gap is. I draw my gap in between that area, drag that across. I wait for price to retest that area and bounce off of it or break through it and invert it. So what had happened here was price broke through it and inverted it, right? So we also have this gap that is opening gap, which I always say to you guys, if you watch my videos, these gaps are magnets, right? So price is going to pull back to these gap areas and at least tap these areas, right? Now, how far it pulls into this gap, that's another story. But most of the time, it will at least come back and touch this gap. So, and with scalping, you don't need a big move. So I don't need the whole thing, the whole gap to be filled in order for me to make money, right? I only need it to get in at a good area and project price to hit that gap, take my profits as price is hitting that gap, and make sure that I don't put myself in drawdown to where I'm losing my profits, right? So what we have here, like I said, is a 2-minute gap here. That gap got inverted, and then I waited for the candle to retest, but I went to the 1-minute time frame to actually get my retest, and you can see here on this 1-minute candle, like it broke through, right? And then I saw this push back up and rejection from it. I immediately got in right here, playing puts to the downside, expecting price to at least tap this area, right? So if we would have turned around right here, I still would have had a 1-to-1 trade, right? Still would have had a nice 1-to-1 trade there, right? But it didn't. It kept going through. It kept pushing. It was a pretty strong momentum. And usually what happens is, like I said, this gap area usually gets filled. So I was even projecting that price could come all the way down to here, right? But we also have this blue area, I believe, is a 4-hour bearish gap. So what happened is it looks like price inverted that gap, pushed up, retested it, okay, and then pushed out, retested it again, created a double bottom, and now it's like completely gone. All right, I was able to catch this play up here too. Only had like 2 contracts in this play because I was pretty much out of buy power after taking these 2 trades. I should have been a little bit more patient and waited for the bounce off of this area or the break through this area to get my second trade and go a little heavier. Um, but no big deal there. You know what I'm saying? At that point, at this point, I've already made most of my money on my first trade. I'm kind of just mining, just small scalps to just kind of make some extra money to just beef up what I've already made. Just making sure that I don't lose the profits that I've already made. That's a big thing about trading, man, is being able to hold on to your profits, right? Not give your money back to the market. That's why a lot of times with my second and third trade, I don't care if that mug runs and hits the ceiling, bro. Like I've already made my money here. I've hit my goal here. I don't need to keep reaching. There's going to be another day. There's going to be another opportunity. If you want to make more money, then you've got to change your risk management. You've got to change, how many contracts you're buying. You have to make sure you go through the complete setup, the complete process to make sure that you're prepared risk management wise every day when you come to the market. Consistency is so huge, right? Stop trying to hit a home run in one day and understand that it's a marathon, not a sprint. So yeah, easy play here off of IWM, right? Easy, very easy play. Gap inversion. We get a retest. I'm in on the retest. I think I bought the most contracts I've bought ever with like 15 contracts. But IWM, these ETFs run a little differently, so you can buy a little more, but you just got to be careful with ETFs. You got to be careful. You got to be careful with any trade, but you got to know what you're doing. And the risk management part is just like super super important because you over risk here and then you go in drawdown, you lose a lot more money than you would like to lose. You know, um, so I'm working on upping my risk management a little bit more here in 2025. Just as my account continues to grow, I'm looking to buy more contracts and things like that to continue the growth of my income as well. So, that's on you to decide when to do that. But just make sure when you do decide to do that, you actually take the time to go through and restructure your trading plan. So, so yeah, man. I mean, as simple as that, yo. Like I can't make this video any more simpler than that. Quick 8-10 minute video explaining, showing you guys exactly why I got an IWM. Like I said, the gap inversion here, the retest, and then the push. Right? We had the 2-minute gap here that was formed over here. You see where I drew this line at from here to that candle. That was our 2-minute gap. Oh, yeah. That was our 2-minute gap right here that got inverted, right? Once we saw the inversion of this gap, we wait for the retest. When the retest happens and then we start getting a rejection, I'm in. Stop loss is at the top of the inverted gap, right? Top of the inverted gap. So if we were playing the regular bounce off of this 2-minute gap, price would have came here and bounced off of it and started going this way. We would have got calls here maybe. Yeah, we would have probably got calls here and projected price to break these highs, and my stop loss would have been at the bottom of this zone. But because we inverted it, my stop loss is at the top. That's why I love trading fair value gaps, man, because the stop loss is perfect. Like you can't beat it when it comes to just having great risk management with a fair value gap strategy. Because like I said, if you're entering on the touch of the fair value gap or the rejection of the fair value gap, you're just gonna have a really good stop loss. And you've got to respect that stop loss. You've got to respect it. So yeah, that's gonna be it for the video. Quick IWM trade. That's the only trades I took today. As you see, I took 3 IWM trades. All were money. Like I said, these last 2 were very small because I've already made, I used most of my buy power here on this one trade, right? I use about 80% of my buy power here on this one trade, and I used a little bit more on these other 2. So was very confident in the setup. That's why I went with a little more than I normally do. Normally I'm 50 to 70% of my account, but this time I went 80 because the setup was just perfect, right? We have the gap inversion. We have the magnet gap that's from opening, right? This is a fair value gap, and this is like an opening gap. So we had an inverted fair value gap, and we have an opening gap below, which is our magnet. I mean, I just knew price was going to push that direction and into that zone. So yeah, hope that helped in some way, shape, or form. Discord is linked below if this video makes it to YouTube. Calendly is linked below if this video makes it to YouTube. That way you guys can book your one-on-one call for free with me, and I will go over with you how to help you fix your current strategy if you're already day trading. And if you're not day trading, I will help you get set up and get started, get your broker, all that good stuff, and get you learning the right information, the right strategy, so you can have success right away in the markets. So yeah, hope that helps. It's your boy AJ. Peace and love. We out.